Hello everyone, my name is Jordan Lee and I'm a mortgage lender based out of Portland, Oregon. And today I wanted to cover the difference between a 30-year fix and a 15-year fixed rate mortgage. I know it sounds self-explanatory, but there is some nuance in difference between the two programs, so I wanted to hammer out the numbers with you. This total cost analysis I've set up demonstrates the difference on a $300,000 loan amount between a 15-year and 30-year fixed rate mortgage. The main difference you're going to see is a 0.5% in interest rate, and then difference in monthly payment of about $700. Now the interest rate I'm quoting comes from Optimal Blue's mortgage indice comparison, and Optimal Blue is a pricing engine that about 30% of lenders nationwide use, and I like their indice better than Bankrate or Freddie Mac's indice because they're not factoring discount points into what they're posting. And so you can see that the 15-year is at 3.9 and 30 years at 4.4 on average if you have a 740 FICO. So going back to our analysis here, you can see that over 15 years, if you do a 30-year fix, you're going to pay a lot more in interest than you would on a 15-year, but you're also going to be paying a lot more per month. So you can kind of think about it as a forced savings plan. Another way of comparing the two programs is to say, hey, what if I did a 30-year fixed rate mortgage, but I paid the same amount per month that I would be paying if I was doing a 15-year fixed mortgage? So here we go. I've added that $699 a month into the principal reduction payment, and it looks like you would pay off your loan a little bit slower, so 3/4 of a year slower than you would a 15-year fixed mortgage. So what I make sure to tell people when they're comparing the two programs is they're going to pay off in approximately the same amount of time. It'll be a little bit faster to do a 15-year fixed mortgage, but in the 30-year you have the flexibility, right? So if for whatever reason you can't make that extra $699 that month, you'll be fine. Whereas in this 15-year fixed mortgage, you're locked into that payment. So if you don't make that payment, you're in trouble. Oh, and to qualify for a 15-year fixed mortgage, you're going to have an additional $1,555 per month to afford that extra $700 a month payment. Well, that pretty much sums it up. A 15-year fix is a better rate, but it's a higher monthly payment. You can think of it as basically a forced savings plan. Make sure when you're comparing loan programs you work with a professional that can explain the difference between those two and break down the numbers in a way that you can understand. If you have any questions about any loan programs, I'd be happy to be a resource, and my information will be in the comments below.